What's up, everybody? This is Trader AC here, giving you guys a recap on the trades that we took today for April 6th, 2022. And this is what I told the room today. We've had a series of wonderful events with the Fed, and one of them spoke today in the morning, and then we had the FOMC minutes that were released today. And they were actually released a little early. So this is what I told the room. You can wait until this mess is over, or you could take some trades in between. Okay, this is just really for, traders that are not beginners to trade these events, because, it can get really volatile, and really you have to rely on your price action. How can you read your price action? Is it, is it clear what's going on? Do we have any volume, or are the algos just trading? Okay, so it was a day that you had to mitigate your risk. You had to go ahead and take your profits, and pretty much lock it in when you have it. Okay, so all I was looking at today, I wasn't looking at anything in retail. I was just looking at the ETFs and the ETNs. I was looking at SPY, the SQQQ, and the VIX. Okay, so I was looking at calls over 447 or puts under 446 to continue. Okay, so one thing that we have to remember is about gap fills. Okay, gaps. And let me write this down on the notepad. There's one thing that you guys have to remember about gaps. Gaps, okay. They fill about, maybe 70%. And then sometimes it's just, a half fill. And they don't fill 100%. It's really rare when that happens. And sometimes it'll happen the following day. Okay, so let's say that we gap down, like today, we gap down today on SPY, and sometimes you'll have a gap fill right at open, like we did on the previous gap fill that we had, I believe sometime last month. I believe it was either last month or in February, where we gapped down and then we just filled the gap super quick. But it doesn't happen all the time. Okay, so we can't really rely on the gap fill to be filled all at once. Okay, it's not going to happen. Sometimes it happens, it can happen, the day after, or, it can just take, days. And really what this type of trade is called, it's called gap and go. Okay, or at least that's how I learned how to trade those gaps. Okay, and it's not guaranteed all the time, because again, it never fills all the way. And you also have to take into account a lot of things. Do we have any events coming up? What does the chart tell us? Is the chart clear? Is it choppy? Is it, can we continue either to the downside or upside? There's a lot of things, there's a lot of things that go into it. Okay, and then today, really what happened was that we had the gap down. Okay, so let's take a look here. We had this gap here. Okay, how did we know that we were going to gap down? Okay, how the heck did we know that? And I mentioned it to the room yesterday and to one of our analysts, and I told him, I was like, you know what, I think we're just going to go ahead and gap down tomorrow. And that's exactly what happened. Why? Because we had such a strong bearish momentum yesterday at close. Although we had, this little short squeeze here, we continued to sell after hours. It was really heavy. Okay, we had a lot of buyers present. And then a few days prior, though, I believe it was here on the 30th, I think it was on the 30th or on the 29th, sometime last week, where we had a very heavy dark pool print around here, around 461, and I think it was like 448 or something like that. Anyways, we had a very unusual big dark pool print. Didn't tell us what they bought. Did they buy calls or did they buy puts? We're not sure. But really from the looks of the chart, it looked like they bought puts because we just could not break over this high at 462. We just kept, messing around here with this, between this level. Why? Because we had a lot of, we had some events coming up. We also had, the end of the quarter. We had, the end of the month. We had the beginning of a new month. So a lot of things go on. There's a lot of things that you need to, take into account. Okay, sometimes those events, only events like that, will hold up the market, and then we can see some volatility, whether it be good news or bad news. It depends. But being that we were just way overbought up here, on the 29th. Although, again, the rule of thumb is when we have these bullish pin bars, it's an indication that, what, we are going to continue. Okay, but again, what's the rule? We have to go ahead and open above the previous close. And we didn't do that here on, on the previous day. We tried, but really what happened was that we attempted to fill a gap, and it was filled, I would say maybe by 60%. The following day, we had a massive sell-off and just completely overshadowed the gap. And, you could tell that we were approaching a downtrend. Okay, and this is a textbook reversal pattern that we have to the downside. All right. And again, we discussed this pattern yesterday. And really, since we had heavy buyers yesterday at the close, we had, well, I didn't see that until today because I don't have access to the flow because I don't pay for it. I just like to look at I use other tools for that. But I don't really rely on it 100%. But I saw that today, yesterday at the close, we had a, very heavy put flow for SPY. And so that's what triggered, that triggered our gap down that we had. Okay, we tried to fill it, and it was only filled, again, I would say maybe 60 to 70%. We couldn't even go over that. So we're just chilling here between the EMAs, which is acting as support, and it's letting us know, okay, we need to either break, these levels or continue to sell, to the downside. Okay, so let's go ahead and take a look at the 4-hour. And what I noticed today at the open was that we had this heavy volume, okay? And really what I was looking for, although again, the rule is that, when we gap down, we go ahead and fill the gap right away. But that wasn't the case this morning, okay? Since we had the Fed, make their little announcement today, I don't even know what time they spoke. Let's see, they spoke right at the open. And then we had the jobless claims. But you know what, actually that seems to be a little irrelevant, being that our inflation is just really ridiculous and it's just gonna keep going up. We had one of the Feds speak this morning at 9 on the economy. So, he made his little comments today and it didn't really help. So really what I was looking for, a break of, let's see, what did I say? 447.50 or 446.30. So I was looking at a break at above, more or less around, around here, and or a break under 446.30. which is right here, which is, between this bar here. And so since I saw that this bar, although yes, it was green, doesn't really matter. It wasn't engulfing this candle. Okay, so this just tells you that the sellers are still present. And I held puts overnight, and I didn't cover my position until, we hit 445. I didn't want to risk it. But I did grab more puts with a later expiration date under 44630 because I was looking at the tape and it was a little heavy. Our friends, the market makers, were not present today. And they usually aren't when the feds are speaking or when there's like an announcement. But you know what? The activity on level 2 was very active. So I was just letting, the price action guide me. And I was on the 30-minute. It's one of my favorite time frames. And if you break it down to smaller time frames, you can see that, this was just a little fake out. Okay, we had just a tiny bit of consolidation here. And we couldn't break above. And what do we have here? What did we have right here at the open? Another fake out, right? Does this look similar to what we had yesterday? Kind of. But again, what's the rule when we have these topping tails? Okay, when we have these topping tails, it's telling us that there's a lot of selling pressure. Okay, so just think of someone, pushing down on something, and here really what happened was that the sellers were pushing the price down, and they were getting just a little slightly aggressive, and we ended up just consolidating the rest of the morning. And this is a level that we were watching, or that I was watching, was under 4460, which is right here. I grabbed my puts and I grabbed more puts. I exited my swing here, and then I took profit on my day trade just around here somewhere. And then I moved over to some calls because we were holding support. So I said, okay, so since we couldn't go any lower, I'm just going to go ahead and look for a long position, whether we break to the upside or we break to the downside. Okay, and I grabbed some calls up here. Yes, you have to hold. That's the rule, but we were really holding above this pattern right here. So I wasn't too concerned because at that time, what the Fed was done talking, and what he said didn't really say much, although we had low volume. Really, when you see these patterns, or when there's volume absent, you'll have the algos step in and then go ahead and push the price higher. But that wasn't the case. We were just chilling here. Okay, we were just chilling until they released the minutes early, and we caught a pump. Okay, so I held, and I was very uncomfortable. Let me tell you, but you know what? My stop wasn't hit, okay, because my stop was here at 444.68. So it wasn't even hit. It just kept touching and touching. Okay, so when I saw the breakout and I saw it and I said, okay, well, you know what? If we can hold over 448, then I'm just going to go ahead and cut it. And that's what I did when I saw that we couldn't hold over this resistance level. And I saw a push to the downside. I just immediately got out. I said, okay, I'm going to get out of all my calls. I was in other trades also, and I just got out. And so I got out, and then I moved to puts once we broke under my trigger price. Did I enter a little early? Yeah, I kind of did. But you know what? I stuck to my plan because I saw that we were breaking under the pattern, and it just started to, reject resistance. Yes, we had this short squeeze, which, faked out some bears, but I held, And then, we had another pump towards the end of the day. And yeah, I said that my stop was like around 448, but then I said, you know what, let me see if we can break over 449, because that was our gap fill. I was like, okay, let me just wait it out. And we couldn't hold it, above it at all. And so what happened, we rejected resistance one more time. So how many times did we reject? We rejected 1, 2, 3. Okay. Same thing as yesterday. We rejected 3 times here at the 15-minute. It's the 3 touch rule. 1, 2, 3. Okay. And so since we rejected here all these times, I just, held my put, and I said, you know what, I'm just going to stick to my trade plan, and I'm just going to hold it. And that's exactly what I did. And, the price just started moving lower. We started to get more pressure here to the downside. And, I just held my put. And although, we have, the price here just, chilling between the EMAs, it's still bearish because, we can't break over, 447, 448, and 449. And it's just going to get even more uglier. Okay, so let me go to a bigger time frame, or I'm sorry, a smaller time frame. Let's see, let's go to the 15-minute. The 15 minutes, a little more choppier. And so I didn't really trade the 15-minute. I was mostly on the 30-minute and the hourly. But let's go to the 4-hour. Okay, so we're here sitting on the 200 moving average, which acted as a very strong support. And, we just held, within this level here. And so again, what's the rule? When you open below, the previous candle, that's when you go ahead and you take a short. And that's what I did, because I remember that level and I remember the pattern. I said, okay, well, we can always just come and retest and then go ahead and reject. So what happened today here after the minutes were released were that the bears were shorting the spikes. Okay, they were shorting the spikes, and you can tell they were being shorted because we couldn't break over resistance. Okay, here's another one. Boom, after hours, boom, another rejection, boom. And really all what these spikes are is a short squeeze. That's all it is. It's a short squeeze. And then ultimately just, just pushing the price even lower. Okay. So that's what I did with SPY. And then I also caught McDonald's, which I called out on the room. I caught a very small move, nothing too crazy. I mean, I actually wanted to hold it overnight. But given our conditions, and we have another Fed speaking tomorrow at before the market opens tomorrow at 9 a.m. We have the Fed, James Bullard speaks on the economy. And then we have another Fed, or we have 2 Feds speaking at 2 p.m. tomorrow. So although, McDonald's is a defensive stock, it's, it can go both ways. It can hold, it can break out, or we could just pull back. Okay. Definitely something I'm going to be watching tomorrow, though. Okay, so what was I doing? I believe I called it out around here, like around here somewhere, like around 9:30, 10 o'clock. I was looking for a breakout over 250. Yeah, it was a breakout over 250, and we held. Although we had, this cool movement here, we held, and I took profit here around 251. I was looking for 254, but that wasn't going to happen. So you know what? Since the market started to pull back at that time, at that fake out, I just took my profit and I ran. It wasn't that big, but you know what? I caught a really nice move. But the one that took the cake today was NVDA. One of our traders called it out today. I'm sorry, one of our analysts, Morano, he called us out and he caught, a call position earlier in the morning. I'm not sure what time, but I did look at it and I liked, this reversal pattern. It was very clear. We did have the buyers step in towards mid-morning, right after the 4-hour close. It was very short-lived, but we caught a really nice move. I think he sold around 249-ish or so. Really what I was looking for was a hold over maybe 247, and I was going to go ahead and start to trim, which I did. I started to trim around here at 247.50. And then I just, ended up just getting out completely around 248. And I just took my profit. No big deal. There's no reason to hold, because it could have gone both ways. It could have just broke out, or we could have just sold off, So again, go ahead and lock in your profits as soon as you have them. It's not a big deal. You're not going to hit 100% trades every day. Okay, just go ahead and maintain your portfolio, maintain your risk reward, and know when to hold and when to just lock in your profits and run. Okay, so that's what I did with the video. SQQQ was awesome. It had a great run in the morning, a great continuation. Although we had, the market gap down, we didn't gap up with the Q. And I've noticed that it doesn't really do that. So that's why I didn't hold any calls overnight. And let's see, what was my trigger price? The Q was 35.50. And around here, above our pre-market high. And that's what I did. I waited for the price to hold, and I grabbed a long position. I grabbed some calls, and then so I grabbed it around here somewhere. And then, I took my profit when, we started to see that pump, or a little right before it. I didn't want to get too greedy, so I got out like around 36 something, 36.30, around here. And then, I was looking for a position to the upside, but I didn't really catch it. It was a little too late for me. VIX. The VIX is such a little POS. It's just, again, it should have traded a little better, right? It should have been a clear breakout to the upside, but it was just ugly. And so I caught a small move. I called this out at, above 26. And I took profit around here, around 26.20. It wasn't like really that huge. So, and our volume was just, I don't even know what the heck was going on here. Why did we sell off with the market? You know what I mean? But that's the way the chart works out. So sometimes, these inverse, ETNs and ETFs and stuff won't 100%, move in the opposite direction of let's say like the S&P 500 SPY. Sometimes it won't do that, because I've traded VIX before. I traded, UVXY, and sometimes it can get a little ugly. And so really what I've noticed is that, the SQQQ is a little more clear than the VIX. Let me look at this. We're on a really nice uptrend. And if you go on a bigger time frame, 4-hour, we're just holding, between the zone here now. We're just going to go ahead and consolidate, to make a move to the upside to about 38, maybe even 40. Okay. It still looks really good. Again, we can go ahead and make a move here, pull back, and then, keep moving higher, making new highs. But it looks a little more clear than the VIX, obviously. Okay, so Again, this is what I was looking for at this level at 44468. If we break under this level after hours, we're gonna see some serious volatility to the downside, okay, with SPY. And does it look like we're gonna see it? Yeah, it's starting to get really bearish, starting to get ugly. But I could be wrong. We could just go ahead and just play within this level here, and just consolidate, and then just sell off at open, because that's when the Fed's going to speak. So it's going to get really interesting tomorrow. If you guys aren't really good at reading price action and volume, then I suggest you guys kind of just wait it out, or just take the morning off, or take the whole day off, okay? Because we have a clear calendar on Friday. We don't have anyone speaking on Friday. All we have are wholesale inventories to be released. So it's not that big of a deal on Friday. And again, if you guys don't feel comfortable, with all this volatility, then don't trade. Take a day off. You guys don't have to trade every day. Okay, don't feel obligated or pressured to trade. All right, so let's see. So what am I watching for tomorrow? Tomorrow I will be watching, I'll be watching SPY. And then I'll see pre-market where we're at. Are we consolidating? Do we have more bearish volume? Like what the heck's going on? All right, so I'll be watching here SPY under this level at 44468. Or we could always short squeeze above 44650 or 447 if you want to be a little more, want to round it off. And then we could see a nice short squeeze to the upside. See, because we're just spacing out. We're just spacing out. So worst case scenario, we could just stay in the zone. That's the worst case that could happen. We could just stay here and then come the open and we squeeze and then we pull back. Okay, but depends on how we open. Okay, I'm not really gonna, make a watch list just yet because we have a lot of stuff going on tomorrow. Oh, excuse me. Okay, so that's about it. I'm just gonna cut this video a little short. Again, if you guys have any questions or need any more help or whatever the case is, you guys just want to chop it up and talk about some charts, go ahead and hit us up. Let me know. You can go ahead and join our Discord, and we can go ahead and let you in the room. Okay, so that's about it. So I will see everybody else in the room tomorrow, and good luck trading. Again, make sure you guys mitigate your risk, and always lock in profits when you have them. Okay, and again, if you're not comfortable with trading, within all this, craziness going on, then don't trade. Take a day off, go to the beach. If you guys live by the beach, just turn off your phone, get off the computer, because when you're confused or when you're scared or when you are unsure, then you're not going to make good decisions and you don't have a clear head. So, if you have been doing really crappy this whole week or this whole month or this whole quarter, then don't trade. Take a step back, take a breather, study up. If you want to study my trades, study it. That's the only way that you're going to get better is by, working hard and really just taking your emotions out of the trade. You don't have to, again, like I said, you don't have to trade every day. You don't have to chase stocks. You don't have to do none of that. Okay. As long as you come prepared to the market, you have a plan, you follow your own plan, then you're golden. Okay, so that's all I have for tonight. Stay profitable, guys, and I will see you guys in chat tomorrow.